Joining us with market analysis, Randy Martinson with Martinson Ag. Randy, let's start off. Wheat, the leader on Monday and Tuesday of this week with some record highs in Kansas City wheat. Let's talk a little bit about what's driving that. A lot of it is still weather related, isn't it?
A lot of it is weather related. I mean, you're looking at the drought situations and the poor conditions down in the southern plains, which continues to add adversity to the wheat in the winter wheat crop, especially the hard red winter wheat crop. Up here in the northern plains, of course, we're seeing just the opposite. We're seeing wet conditions that continue to delay planting, and that likely doesn't look like it's going to change anytime soon either.
Yeah, now some heat moving into the southern plains again, and they've had some heat. We do have the Kansas Wheat Quality Crop Tour that's going to be going through and is likely to see a much smaller crop than what USDA projected here on the last WASDE, don't you think?
Oh, I think so, especially in the western regions. You know, we're hearing reports of the crop west of Dodge City as being virtually nothing, and it improves as you move to the east, but it slowly improves. So it's likely we're going to continue to see lower production estimates come out of that region, even out of Oklahoma and Texas, as that both of those states continue to see hot, dry conditions as well.
So I mentioned record highs. We took out the 2008 highs in Kansas City wheat. So how much higher do you project this crop or prices to go?
Well, you know, we're up in nosebleed sections now, but it doesn't seem like we're slowing this market down. You know, even on Tuesday, we looked like we were going to break off of some changes as far as the India was concerned in their export market, but the market didn't seem to take note of that very long, and we did see the market rally back up again. At this point, you know, it's hard to say where the high is going to be, but we do have some room to move up, especially if we continue to see world stocks tighten up and world supplies tighten.
Right, and India confirming their wheat ban, and so that was their export ban. That was certainly part of the equation here too, wasn't it?
It was. I mean, that kind of helped give the market the limit up move on Monday, and that helped open the market up for a little bit more strength on Tuesday. So, yeah, we are seeing that add to it because it's now looking like maybe USDA wasn't far off by increasing our exports in their last report.
What about Minneapolis wheat? We did score more contract highs there on Tuesday, and it does look like that market is going to continue to go up here as this crop is shrinking because up in the Dakotas, Minnesota, not able to get planted there. Spring wheat planting, only 39% this week.
Yeah, we're about 40 some percent behind in North Dakota. You know, Minnesota, which is some high yielding area up in that northeast corner or northwest corner, they're only at 5% planted. Very likely that not the crop's not going to get planted up in that northeast part of North Dakota, northwest Minnesota, and that's where the yields are. You know, we're getting some activity in the southwest corner and the western parts of the state, but it's limited. But yeah, we're going to continue to see production estimates drop for spring wheat because we're just not going to get the acres in.
How much prevent plant do you predict up there on spring wheat?
On spring wheat, I think we could easily see somewhere around a 500,000, maybe 750,000 acres go towards just prevent plant wheat. And that's not to say what we could see that gets prevent plant corn.
And speaking of the corn market, corn did not follow wheat on Tuesday as it has been, but it did look like perhaps there was some pressure there with planting at 49% nationally. That maybe was a little ahead of expectations.
Yeah, it was pretty close. I mean, it was right in line with what they were expecting, maybe a 1 or 2% above, but it was showing that the central and eastern corn belt are getting progress. They're getting in the field, they're getting it done. It's the western parts of the corn belt and primarily, mostly, you know, western Iowa, North Dakota, Minnesota, South Dakota that's having the trouble. And, you know, we're not looking at it as being considered the big producing area, but we have quite a bit of acres. And right now, last planting date is May 25th for most of North Dakota. It's likely we're not going to see a lot of corn get planted.
Yeah. How much of the setback on Tuesday was just profit taking, maybe a little pickup in farmer selling too?
I think a lot of it was. I mean, for those that are getting the crop planted, there was some selling taking place. Of course, up here in the north, we're seeing guys hold back on selling because they're not thinking they're going to get the crop planted, but not enough to sway the market. And I do think some was profit, though.
Yeah. And of course, we scored new contract highs in December corn, new crop corn on Monday. So there's where some of that profit taking comes in. So maybe a little hedge pressure there, huh?
Little hedge pressure, yeah. I mean, we're still looking at some very good levels to, you know, that are very profitable levels to be selling at, even with fertilizer and fuel where it's priced at.
Soybeans were to the plus side though, and we did see the bull spreads working. And so is that an indication there's some export demand coming? We continue to hear, rumors about China being back in the market.
I think it was, and right now the rumors are that China's going to open up a little bit. They're going to relax some of their restrictions because due to COVID. And I think that has got the market excited that they're going to come back into the market, start buying more soybeans, buying more soybean oil. So I think that really was what kind of was the main driver in soybeans.
Nationally planting at 30% done, was that a little bit of a disappointment to the market?
I think a little bit. I think most guys were concentrating on getting corn in because it's a little bit more timely, needing to get that planted. They know they've got time in soybeans, so I think there was a little bit disappointment in that. But like I said, there is time to plant the beans yet. We're running closer to running out of time for corn and wheat.
Yeah, July beans, $17 still is going to be our overhead resistance. We haven't taken that out. We have to get back above that technically, don't we?
We do. I mean, there is some technical levels that we have to trade above. That's a big one, and we'll see if we can cross above it.
Okay, thanks so much, Randy Martinson, joining us with Martinson Ag.